So now we will be starting with the 6 markers problem. Say prepare accounting equation from the following. So first let's go through the question and then I'll start explaining you with the answer. Okay. So prepare accounting equation from the following. The first transaction is commenced business with rupees 50,000. Second, bought computer for 10,000 rupees. Bought goods for cash rupees 5,000. Sold goods for cash 7,000. Paid salaries 10,000. So these are the 5 different transactions. Now they are telling prepare accounting equation from the above transactions. See, the previous kind of problems was like they'll ask for 2 marks, but this kind of problems they'll ask for 6 marks, wherein we have to prepare a format and then start solving, wherein here there is no format. You just write step 1, step 2, step 3 and write whatever the variables that are affected, whether it's an increase or decrease, you'll write that. But here you have to prepare a different table. Okay. So this is the format, this is the table how you put. The heading will be effect of transaction on asset, liabilities and capital. So this will be the heading, and the columns serial number, transaction, effect, assets equals liabilities plus capital. This is the margin, do not mistake and do not draw a line here. Okay. So this is complete column. So here let's start with the first transaction. Okay. So what is the first transaction? The first transaction is commenced business with rupees 50,000. So when you are solving the answer, I want you to write down all these questions, because I'll not be able to take the book here and again take out the answer sheet here. So that's why I want you to write down this in your book, so that it will be easy for you when you're watching this. Okay. So the first transaction is commenced business with rupees 50,000. Now let's put that into a table now. So now, according to the columns, what is the first transaction? I will write down the first transaction. The first transaction is commenced business with rupees 50,000. Okay. So now they're commencing the business with rupees 50,000. Let's see the effect. Now, if we are commencing the business, what will we have in the business? There is an increase in cash, right? Because the person is getting 50,000 into the business, so that is why there is an increase in cash, right? So if you are commencing the business with rupees 50,000, again there is an increase in capital, because this is the capital money, right? So there is an increase in cash and again there is increase in capital. Now what is the formula? The formula is assets equals liabilities plus capital. So cash comes under what? Cash is an asset for us. So how much increase in cash? So I will write 50,000 under assets is equals to, there is no liabilities and capital is rupees 50,000. So now our left hand side is equal to our right hand side. Correct? So now after I finish the first transaction, I'll draw a line here and I will write the same. I will carry forward the same thing. 50,000 is equals to 0 plus 50,000. Clear? So now we are done with the first transaction. Now let's move on to the second transaction. Let's see what is the second question. Okay. The second question is bought computer for rupees 10,000. So now they are getting the computer for rupees 10,000. So what we have to do? We have to write the same transaction here. Bought computer for rupees 10,000. Okay. So now first we will write the transaction, and now let's start analyzing the effect. Now they are getting the computer for rupees 10,000. So what is coming in? Computer is coming in, right? So we will write there is increase in computer, which is nothing but your asset. Correct? Then what else is going out? Money is going out, right? See, we are paying 10,000, we are paying 10,000 cash, money is going out. So I will write this decrease in cash. Increase in computer because we are getting the computer, and there is a decrease in cash because we are paying money to get that computer. Correct? Now this computer is an asset, and when we are putting it in the formula, what we have to write? There is increase in computer and the value of the computer is how much? 10,000. So I will write plus 10,000. Correct? And there is decrease in cash, it seems. This cash also comes under asset only, no? So if there is a decrease in cash, I will have to write minus 10,000. Correct? And there is no liabilities and there is no capital. So I will write 0. Clear? So as soon as I have finished my second transaction, I have to further calculate. So 50,000 plus 10,000 is 60,000. 60,000 minus 10,000, again it is 50,000. So I will write 50,000 is equals to 0 plus 0. Clear? Now let's move on to our third transaction, and the third transaction is bought goods for cash rupees 5,000. So what are we supposed to do? We have to write the same thing. So we are done. And the effect. What is the effect? The effect, what is coming in? First we have to think what is coming in. What is coming in? Goods are coming in, right? The stock is coming in. So there is increase in stock or goods. And what is going out? To get this stock, we are paying the cash, right? So cash is going out. Am I correct? There is increase in stock, we are buying that, and there is a decrease in cash because we are paying the cash to get this stock. Now, stock comes under our assets. It is not a liability. Stock comes under our assets and cash also comes under assets. So what is the value of the stock? So the value of the stock is 5,000. So I will write plus 5,000. Then cash is going out, right? Why? Because we are purchasing the goods for rupees 5,000. We have to pay the cash, right? Cash is going out. So I will write minus 5,000. Clear? Then there are no liabilities and there is no capital in this particular transaction. So what I have to do after every transaction, I will draw a line, and then what I will do, 50,000 plus 5,000 is 55,000 minus 5,000 is again 50,000 equals 0 plus 0 because there is nothing under liabilities and capital. So now we will start with the fourth transaction. The fourth transaction says sold goods for cash rupees 7,000. So we are selling the goods for cash which is worth rupees 7,000. Sorry, not 7,000. Let's make it 5,000. Okay, it's not 7,000. Let's make it 5,000. So now what am I supposed to do? I have to write the transaction here. So after writing the transaction, we have to think about the effect, right? What is coming in? What is coming in? Money is coming in, right? We are selling the goods for cash and 5,000 money is coming in. So I will write increase in cash. Correct? And what is going out? Goods are going out. Why? Because we are selling the goods. So goods are going out and we'll write it as decrease in stock. Now, cash comes under our assets and stock also will come under assets. So everything we have to write in this particular column. So it is cash worth rupees 5,000 is coming in. So I will write plus 5,000 and stock worth rupees 5,000 is going out. So again I'll write minus 5,000. Clear? Then there is no liabilities and there is no capital. So after every transaction, 50,000 plus 5,000, 55 minus 5, same. 50,000 is equals to 0 plus 0. Now we'll move on to the last transaction. Is paid salaries for rupees 10,000. So this is an expense for a company, right? Because if you are paying salaries, it becomes an expense for you. So you are paying a salary worth rupees 10,000. So what are we supposed to do? We have to write the transaction here. So now we have to think now decrease or increase in what? Now we are paying salaries worth rupees 10,000. So how can we pay the salary? We are paying in the form of cash, right? So cash is going out. Don't you think cash is going out? Yes, cash is going out because I am paying salary to you. My cash is decreasing. So there is a decrease in cash. Correct. And there is also one more effect. There is decrease in capital. Why there is decrease in capital is because from the capital money only I am paying salary. My cash is decreasing. So from that money, from the capital only, I am paying you salary. So that is why there is a decrease in capital. Clear? Now, our cash comes under asset. Our cash comes under asset. So, I will write minus 10,000. Clear? Then, what about our liabilities? There is no liability, so I will write 0. Then, there is a decrease in capital. There is a decrease in capital, so I will write minus 10,000. Clear? Now, what am I supposed to do? Finally, I have to know 50,000 minus 10,000. It is 40,000 is equals to 0. Then plus 40,000. How I got this 40,000? Can you see here? Plus 50,000 plus 0, 0, 0, 0, 0, 0 minus 10,000. So plus minus, you have to minus. So 50,000 minus 10,000 is 40,000. So plus and minus, which sign is greater? Plus is greater. So I have written plus 40,000. Now your left hand side and right hand side is equal, and I will write it as final equation. Clear? So 50,000 minus 10,000 is 40,000 is equals to 0. When there is a 0, you just have to look above, check above whether there is any amount there, because when it is 0, you will consider it as 0 only. So that is why you have to just see on top whether there is any numerals there. Okay, so that is where here it was minus 10,000. So if you see on top, there is 50,000. So 50,000 minus 10,000 will give you 40,000, and to worry about the sign, plus or minus, which has a greater value? Plus has a greater value, so I have written plus. So now your left hand side is equal to right hand side, so your problem is correct, and that is your final equation. Clear? So this is how your 6 markers problem will be. Your second illustration goes like this. Even this illustration has 5 transactions. I'll just read out the transaction once. Purchase goods on credit from Mr. X for rupees 80,000. Sold goods on credit to Y for rupees 1 lakh. Return goods to X rupees 5,000. Return goods by Y rupees 8,000. Commission received rupees 15,000, and they are asking us to prepare what? Prepare the accounting equation from the above transactions. Okay. So now let's start preparing the accounting equation from all the 5 transactions. So I have put up the format as usual, effect of transaction on asset, liabilities and capital. So same column, serial number, transaction, effect, asset equals liabilities plus capital. And I have also written the first transaction. The first transaction is that we are purchasing the goods on credit basis from Mr. X for rupees 80,000, which means we have purchased goods, but we have not paid the complete money. Clear? Now, what is the effect from this transaction? What is coming in? Goods is coming in, right? We have purchased it and goods is coming in. So the effect will write goods is nothing but your stock, right? So there is an increase in stock. Now, purchase goods on credit from Mr. X for 80,000. There is one more effect in this transaction is there is increase in creditors also. So why there is increase in creditors is because we have purchased goods on credit basis, which means we are liable to pay money, right? Some or the other day we have to pay the money back. We cannot sit back without paying the money. Will they be quiet? No, we have to pay the money, right? So goods is coming in for now, and since we have bought the goods on credit basis, we are liable to pay one or the other day. So that is why there is an increase in creditors. Why? Because we have to pay them. A creditors, it is increasing. Creditors comes under what? Under it is liability. We are liable to pay, right? So there is increase in our liabilities. Clear? Now, our stock comes under what? It comes under asset. So, now, how much is our asset value? Our asset value is 80,000 is equals to creditors. We are liable to pay. So, this creditors comes under liabilities. So, I will write 80,000 plus there is no capital. Clear? So after that, what am I supposed to do? I have to write 80,000. The same thing is equals to 80,000 plus 0 because there is no transaction yet. Now let's move on to the second transaction, and the second transaction, they say sold goods on credit to Y for rupees 1 lakh. Now let's write down that. Now what is the effect in this transaction? After selling the goods on credit to Y for 1 lakh, what is the effect here? What is going out? Stock is going out, right? Because we are selling. The stock is going out from our organization, so there is a decrease in stock. Clear? Now, the next is we are selling it on a credit basis. Credit basis in the sense we are selling the goods and that particular party, our customer, is not paying us 1 lakh then and there. If our customer is not paying then and there, which is a credit sales, then he becomes our debtor, right? He should pay us something. So there is increase in debtors, right? Because we have to receive more. There is an increase in debtors, right? So now let's put that into an equation. I told you there is a decrease in stock worth rupees 1 lakh. So I will write minus 1 lakh. Clear? Minus 1 lakh. And I also told you that we are liable to receive, our debtors should give us something, so there is a increase in debtors, so I will write plus 1 lakh because we have to receive it, right? We have to receive this 1 lakh one or the other day. Goods worth rupees 1 lakh is gone and we have not received this 1 lakh. We are yet to receive. So that's why I am writing 1 lakh is equals to, there is no liability and there is no capital. So now 80,000 minus 1 lakh plus 1 lakh will give you 80,000 again is equals to 80,000 again, yeah, plus 0. So left hand side is equals to right hand side. Now let's move on to our third equation or sorry, transaction. Third transaction says return goods to X rupees 5,000. So I have returned the transaction, return goods to X rupees 5,000. So when we are returning the goods to particular person which is worth rupees 5,000, what is going out? Goods is going out, right? So that's why there is a decrease in stock. Now remember, this transaction is related to the first transaction. We purchased the goods, right? We have purchased the goods on credit which is worth rupees 80,000. Now out of this 80,000, some goods which is worth rupees 5,000 we are returning back. We are giving back. We don't want, or that is damaged or something. We have some complaint, and out of 80,000, 5,000 worth rupees goods we are returning back. So there is a decrease in creditors. How is, see here there was increase in creditors because we were liable to pay 80,000. We were liable to pay so much money to them. But here we have returned it. So there is a decrease. So how much ever we were liable to pay now, it is decreased a little bit. So that's why I've written decrease in creditors. Now let's put this into equation. Stock comes under what? Stock comes under assets. There is decrease. So I will write minus 5,000 is equals to, there is a decrease in creditors. So creditors comes under liabilities, right? So we have to pay them. So there is a decrease. So it is minus 5,000. So minus 5,000 plus 0. Why minus 5,000 is because there is a decrease. I am deducting it. Goods worth rupees 5,000 I have already paid. I am returned it. So I will not be paying again. So that is why it is minus 5,000. So now 80,000 minus 5,000, it is 75,000. Same here, 75,000 plus 0. Clear? Now let's move on to the fourth transaction. Fourth transaction says return goods by Y. So see here it was return goods to. That means we are returning. Here return goods by Y, which means our customer is returning the goods to us. Clear? So Yeah, I've returned the transaction here. Return goods by Y rupees 88,000. So when our customer is returning the goods to us, what happens? There is increase in stock. How? See, they have returned the goods to us. The goods is coming back. So there is increase in stock. See, this transaction is related to the second transaction. You're getting my point now? Yeah. So when they return the goods, there is increase in stock. Then, what is the other thing? Here, we have sold and we were liable to receive 1 lakh, right? We were liable to receive 1 lakh. So out of this 1 lakh, they've already returned us the goods which is worth rupees 8,000. So that's why there is a decrease in debtors. Clear? It was increasing because we were liable to pay 1 lakh. Now out of 1 lakh, we've already received 8,000. So that is why I'm decreasing the 8,000. So stock comes under what? Assets. So there is an increase. So I will write it as plus 8,000. Then debtors also are assets. We are yet, we have to receive, right? So out of this plus 1 lakh, 8,000 we have already received. So I'm writing minus 8,000. Clear? So is equals to, what happens? There is no liability here and there is no capital also. So 75,000 plus 8,000 minus 8,000 remains same, which is 75,000, is equals to 75,000 plus 0. Clear? Now let's move on to the fifth and last transaction, which says commission received rupees 15,000. So first we have to write down that. So I've written commission received rupees 15,000. So what is the effect? What are we receiving? We are receiving the commission. That commission will be in what form? It will be in the form of cash. So I have written increase in cash. So what will we do with this cash? We will invest it as our capital, right? So again there will be increase in our capital. Why? Because if we are receiving the commission in the form of cash, that cash we will utilize it as a capital only. So that's why there will be increase in capital. So how much cash is coming in? Cash comes under our asset. So I will write it as plus 15,000 is equals to, there is no liability and there is also increase in capital, which I will write it as plus 15,000. Clear? Now I have to cross 75,000 plus 15,000, it is 90,000. Clear? Is equals to, there is a 75,000 here plus 15,000. On top also, if you cross check, there is nothing. From the beginning it is 0. So it is just 15,000 under capital side. Now our left hand side is equal to right hand side. 90,000 is equals to 75,000 plus 15,000, which is nothing but, if you add this you will get 90,000. So this is our final equation. Clear?